Hey there, it's Melissa with Atlas CFO. Today we're going to talk about what is percent complete. Percent complete accounting gets asked, be like, well, is this on a percent complete method? Maybe, I don't know. Percent complete for contractors also can be referred to as GAAP or sometimes even book. But whenever we're talking about contractors, construction contractors, and we talk about percent complete, that is the method that we would expect your books to be on. Whenever somebody gives you this work in progress schedule, and you say, here you go, fill this out for me. Why? Why are we doing this? Today I'm going to explain why this is so incredibly important, what is percent complete, and then it'll make it all make sense. It's going to make this work in progress make more sense to you. So we're going to take just one job, and we're going to make this job super simple for Melissa, because even if I'm an accountant, I don't want to do math. We're going to take one job and we're going to walk it through what the difference would look like if it was percent complete versus not percent complete. Hope you'll stick with me on this. It's good stuff. I promise it's good stuff. So first up, we're going to do non-percent complete. And let's walk through an example job. So what would happen on month one is we get busy and we say we're going to have $50,000 in cost. We didn't bill it that month. And so we have $50,000 as a loss for this particular month. Okay? And we're going to make this a $100,000 job, $50,000 in cost, and $50,000 in gross profit. I'm making it super simple, and we're going to make it really, really easy. So this is a non-percent complete. This is what happens to gross profit. Month two, you bill the job, but you had your cost last month. And so you're going to show $100,000 profit. Well, you say, well, that works, right? The end result is the same. We got $100,000 and we got $50,000 in cost, so we got it all worked out. Unfortunately, what this does, though, is it makes January looks terrible, and February looks awesome. And so when you get January's financial statements, you go, gosh, what happened this month? Why does it look so bad? What do we do? And then we have to go through this whole explanation of, oh, well, but remember that job, we didn't get it billed, but we'll bill it next month and it all evens out. So in February comes and we're like, yeah, woo-woo, we're winning, everything's working, look, we're making money. And we think, oh, that money is ours, we earned it, what if we spend it? What if we spend the money that we actually had in cost over here? Oh, that's no good, no good at all. So what happens in a percent complete world? So we're going to erase this. And we're going to do the same job and do it a little bit different. So in this particular example, we're going to put, well, I might do three of them for you. We're going to put $50,000 in this month. But because we're going to use the percent complete method, the work in progress schedule would show this job as 100% complete. And therefore, we are owed, we deserve the revenue. And this gets booked, I know you can't see that, it gets booked as an under overbilling adjustment, sometimes known as a WIP adjustment. So this isn't an AR, it's not been billed yet, but we book it through this process so that we show $50,000 in profit. No more ups and downs, yay, oh, sad. It's just, we know what to expect. This job was done, we had 100% in cost, and now we get to show this 100% in billing with the WIP adjustment. So we're using percent complete. We are 100% complete on this job, therefore we get 100% of the revenue. Let's take this same job and let's divide it out over a couple months. I'm going to make this a little easier to see here. Call this WIP. Okay, first month. Let's do $25,000 in cost. In the second month, we're going to do $25,000 in cost. So now we know that we have, $50,000. So this is 50% complete, and this would be 100% complete. So we know that we want to take the same percent, the percent complete, and we want to take it times the amount that we have for contract. So right here, we're 50% complete. So we would get to take 50% of our $100,000. Oh, we know what that is? It's 50. And guess what? Now in this month, we've got 100%, so we get to take the other 50,000. Same numbers, same exact numbers. It's all about timing. And it's all about creating a standard, easy to follow gross profit so that you don't have these ups and downs that create a lot of excitement, sometimes negative excitement. And we always know where we stand. So percent complete takes you from having cost or billing that don't match up, and it matches the cost and the billing, the cost and the revenue every single month so that you'll always know where you stand. It's so incredibly, incredibly important whenever you're trying to operate a contractor to understand, am I making money? Well, you can see that if you use the percent complete method, that you would have a steady way that you're making money. And you can see that if you don't use work in progress, if you don't use percent complete, you can have this ups and downs, and you're going to have a lot of costs and worry, and then you're going to have a lot of billing and rejoice, and it all actually comes out in the wash. It was just a lot of ups and downs for no reason. So the work in progress, percent complete, takes care of all of this for you and makes it steady, even, and it even helps you understand performance just a little bit better. I hope this helped you understand exactly what is percent complete. We actually have an 8-part series. I think it might even be bigger than that at this point in our all access training. We have a whole section just on work in progress because it is kind of a bear. First time I learned to work in progress, I was 22 years old. It was just a couple of years ago. And I know where I was sitting and what I was wearing, and I was pretty upset because I couldn't understand it. I've spent all these years, more than 20 years, just trying to help people understand this process, because when they get it, when our contractors get this, profitability changes. The organization changes, cash flow changes, because they understand how these jobs are running through their financials. So join us in All Access, spend some time working on this, and I'm glad to spend time with you today. Talk to you soon. Bye-bye.